Insurance is just a critical component of a financial plan, especially when it comes to life insurance. And life insurance has changed over the years. Here's what I mean. For many of the families that we have that come into our offices to talk about financial planning, to sit down and talk about their risk management piece of their pie, or sometimes the insurance umbrella, we often find that our families have not touched or evaluated their life insurance policies in a very long period of time. So, what that means is many of our families who bought policies in the 80s and 90s have been riding on these essentially chassis of insurance without really evaluating what's going on until the unthinkable happens. And the unthinkable is they get a notice in the mail, which is usually sparked the conversation to say, Grant, my premiums in my policy are skyrocketing exponentially. What do I do? And so at the end of the day, we have to remember that life insurance has had its own journey and has changed along the way. Case in point, there is a type of insurance called term insurance, where you buy it for a term. That can be 10 years, 20 years, 30 years. Most term insurance is sold in 20-year tranches. And sometimes, and this is where it has changed, you can actually pay a little bit of a higher premium to receive your premium back at the end of the period if you have not passed. So it's a positive change for term insurance. There's other permanent insurance, more specifically, universal life insurance, which is a very popular product sold in the late 80s, early 90s, and early 2000s with the allure of you can put little premium in like a term policy, but have this permanent policy that you can never outlive. Well, here's a little kicker, right? Here's how things have changed in those policies. And this is what we find for many of the families we see. When those policies were sold in the 80s and 90s, no one expected interest rates to go to zero or to be as low as they have been for as long as they have been. So at the end of the day, you think this permanent policy is working in your favor, and then you get a notice that says, by the way, your X amount of premium that you were paying per quarter or per month has now increased 4 times. And the reason why is that the cost of insurance is exponentially increasing in those policies over time. But again, what changed? Interest rates. And so at the end of the day, not all insurance products are designed to actually fill out the whole lifelong longevity the policy was originally told to you for. So if you have a product that is a term or UL policy, get that thing evaluated because we just want to take a look under the hood to see if you're going to run out of time in those policies. Another simple way to do this is to call and ask for an in-force illustration. An in-force illustration will give you that look under the hood to give you an example of how long this policy has left. And you don't want to be asking for that in-force illustration when time is of the essence. Because again, at that point, the only thing you can do is either let it go away or pay more premium. So at the end of the day, we hope you found this content beneficial. We hope that you can go and evaluate your policies, those in-force illustrations. So thank you for your time. We'll see you at the next one.
If you're interested in more content, please click the link above. If you're interested where you stand personally, please click the link below and you can create a profile, and a member of our team will reach out to talk about where you stand within the 5 critical elements on your financial journey.